want to expose everything you won't admit.
And action.
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What up everyone, it's your girl, Superwoman. I know we can change the world for the better, one positive day at a time. My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room, they had no idea. Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone. Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And I think Mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did,
Position open on euro, ladies and gentlemen, at 120.20. Well done. Okay, let's wait how long it will take this order to get us profit. Okay? Speak to you later, guys.
This video up, a couple of my friends are going to watch it, probably make fun of me, and that's going to be the end of this. The second and third video came from, wait, 70 people watched my first one. Can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman. What up everyone, it's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She started a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars. In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to these islands, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean, but also
Rixala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, all is kind of right with the world.
Yeah.
We're back in our Interactive Brokers studio here in New York City, both of us. We're also streaming on YouTube. It is February 3rd, Wednesday. And listen, it's the news that stunned investors. Happened late yesterday. We thought we were going to be talking about Amazon earnings. Instead, we talked about, wait, it's got a new CEO.
Okay, so I was left speechless. Listeners of this program will recall. I have to say, I was pleased to hear earlier today on Quick Take, we interviewed Brad Stone, who literally wrote the book, 2013, The Everything Store, one of my favorite business books.
Yep.
He had a similar reaction. So I felt okay. You know, he screamed an expletive.
When an insider, right?
And as he told us on Quick Take earlier today.
All right, and he's going to join us again and talk to us a little bit more about what's going on, what this means for the future of the world's largest online retailer. First up, though, let's get you going with a check on that trading day. Here is Charlie Pellet.
We're at highs of the day on this Wednesday with the Dow, the S&P, NASDAQ all advancing. NASDAQ at a record. You guys talking about Amazon up right now by 0.1% after that earnings report last night. And, of course, the Bezos shocker. Google, Alphabet up now by 9.25% year to date. Yes, I realize this year is very young, but so far this year, Google shares are now up by 20.2%. Stocks are extending gains into a third day as investors assess those corporate earnings reports, but the S&P is advancing at a slower pace relative to the surge of the past two sessions. Right now, we have got the S&P up 18, a gain of 0.5%. The Dow's up 56, up by 0.2%. NASDAQ up 81, higher by 0.6%. 10-year down 8/30 seconds, 10-year yield 1.12%. Gold down 0.2%, 18.34 the ounce. And West Texas Intermediate crude up 1.8%, 55.74 a barrel. Gold, as I mentioned, lower. Cannot ignore silver. A lot of interest in silver, up now by 1.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yep, interest again in silver. Go figure. All right, Charlie Pellet, thank you so much. Let's hit the Business Week agenda. Dave Wilson with us, stocks editor at Bloomberg News on the remote access from New Jersey. So, Dave, where do you want to start?
Where do I want to start? I mean, as much as the focus is on Amazon, given the change at the top that's coming, I mean, really the story here from a market perspective is more what's going on with Google's owner, Alphabet. The shares are really leading the way and have been all day. I mean, you look at the S&P 500 and a decent chunk of the gain, can be traced right back to Amazon. In fact, as I speak, roughly 2/3 of the advance that we're seeing in the S&P 500 comes down to those two classes of Alphabet shares in the index. They're both up more than 9% in response to their results. It's all about how online advertising came back in the fourth quarter. And, kind of wrapping up the, shall we say, big tech earnings season with a bang.
20%, more than 20% year to date, as we just heard from Charlie Pellet. That is a shocking figure.
Well, I mean, when you consider that GameStop is up 470%, maybe not so shocking, or that Tesla's up 21.5%, maybe a better comparison since you're talking about a much larger company. So it's just that, if you think about those half dozen or so companies that you focus on because they're the biggest by market value, Alphabet tends to be relatively steady. I mean, you don't necessarily get the day-to-day volatility that you see with the likes of an Amazon or an Apple or certainly a Tesla, except when you get earnings like this. And there is a history of Alphabet shares moving quite a bit after earnings, and certainly this is one of those examples.
Right, and Class A and Class C, they are your top two gainers in the S&P 500. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. This portion brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. So we're going to learn more, too, about Amazon specifically. Brad Stone, as you mentioned, Tim, we're going to get to. Also, we're going to talk about his successor who has been leading Amazon Web Services and what it means for the company. In the meantime, Dave, let's not forget, I feel like the Amazon news reminds us that, folks, when it comes to it and the markets, ultimately we get back to fundamentals. The changes companies are making, the deals that they are doing, the debt they are raising, like running the business. And that's what that reminds us of.
Yeah, absolutely. And if you think about Amazon, the management change that's coming is as much as anything a confirmation of where the company's growth has been the last few years, because web services really, cloud computing has been sort of a gold mine for Amazon, growing at a much faster pace than their more traditional. It's hard to say traditional with a company like Amazon, but you know what I mean. Their original online retailing business. So that's a piece of it. Also, bear in mind, fourth quarter results at Amazon, earnings and sales beating estimates, so that's certainly part of the mix.
There were wild, strong numbers.
Yeah, this is, keep in mind, they exceeded $100 billion in one quarter and exceeded it handily.
Right. Exactly.
Well, that's it. We're all buying online, or at least more of us are. Given the coronavirus pandemic, I can't tell you the last time I was in a store, but I can tell you I've been certainly purchasing stuff on Amazon lately. So that's a piece of it. And, of course, it's the holiday shopping season covered by their fourth quarter, which follows the calendar, unlike a whole lot of other retailers that are a month behind the calendar. So you really do get sort of the full effect of what's been going on over a period of years, and then more recently with the effects of the COVID-19 pandemic.
Well, Amazon's certainly one of the biggest stories that we're following today, but it's not the only thing happening when it comes to today's trade. Energy higher by 3.6% right now. Communication services by close to 3%.
Is that your best performing group?
Energy, yeah. It is the best performer by far.
And I think you also have to note the comeback in the, shall we say, Reddit traders' favorites. I mean, you've got GameStop up 16%, AMC up 19%, AMC Entertainment, that is, Express up more than 9%. Now, those stocks have really been beaten up the last couple days, and they've got a long way to go before they make back anything like what their losses were. But at least it's an up day.
GameStop has been down 5% today, and at its high, right at the open, no, actually it went above the open, it was up 26%, so quite a range. Just saying.
Alive and well.
And that early morning jump, interestingly enough, coming off the news that the company was getting a chief technology officer. First one.
That's a fundamental change.
It is.
I think a reflection of the fact that they have Ryan Cohen now on their board, the co-founder of Chewy.com, which of course was all about selling stuff online, pet food in that case, or supplies that, and he's really been pushing GameStop to do a whole lot more online. We'll see if having this chief technology officer makes a real difference.
Yeah, I mean, look, that's the big question, and I think it's got an uphill battle considering that retail gaming, just considering the state of retail right now and GameStop's outlook for the next few years. It's going to be an uphill battle.
Well, you do wonder too, right? If they can ultimately really pivot to online and somehow become a leader. You're shaking your head. You don't think so?
No. But look, I'm not giving financial advice, but there was a reason the stock was trading, in the single digits a few weeks ago.
Yeah, and we'll see if any.
Just one point, if I may.
Yeah.
I mean, GameStop's big thing was selling video games, to people, and the companies that make them are selling them either directly or through subscription services. You look at the numbers out of Sony. That's now the biggest piece of their business is video games, and the American Depository receipts are up about 13% in U.S. trading. So that's where GameStop's business is going, to the likes of Sony.
All right, good stuff, Dave. And you'll come back a little bit later on with your stock and chart of the day. We are going to be all in on Amazon. As we mentioned, we've got Brad Stone, who, yes, did literally write the book about Amazon. So we're going to talk to him about what this means. We're going to check in with our Matt Day about the new guy, Andy Jassy. Our cover story this week, the 5 things to get right before the next pandemic, because, folks, we're going to have another one.
Yeah, that's the scary thing to be thinking about. But hey, I really hope we are much more prepared for the next one than we were for this one, Carol.
Fingers crossed. And we're going to check in, too, with the president and CEO over at Subaru of America Talk Cars. Let's do the Bloomberg Business Week bite of the day. One number that tells us a lot. Today's number, Tim, $4 trillion.
Kia Motors jumped as much as 14.5% on Wednesday following a report that Apple will invest 4 trillion won, $3.6 billion, as part of a collaboration with the South Korean car maker on making electric vehicles.
Yeah, that's pretty cool. The iPhone maker plans to set up production with Kia and build Apple cars at the automaker's facility in Georgia. I think this is fascinating. I think this is going to be an interesting year when it comes to EVs. We're going to talk about that with Tom Dahl, who is president and CEO of Subaru America.
Yeah, we got a great show coming.
We do indeed. All right, let's also get you going on world and national news on this Wednesday. Here is Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Joe Biden is pleading with House Democrats that backing anything less than $1,400 in stimulus checks would mean starting his presidency with a broken promise. That's according to People on today's conference call. Biden is looking for Republican support, but Democrats, they're not waiting for that to happen.
Democrats feel that delay and compromise on stimulus made the recovery from the financial crisis slower and weaker. White House economic advisor Jared Bernstein commented in a Bloomberg interview.
We've had these kinds of air pockets created by the kind of wait and see what happens next so we get behind the curve. We have to make sure that it's reaching people who've heretofore been left behind. That connective tissue has been torn by policies that's been very insensitive to those in the middle class and down. We're going to try to fix that.
Bernstein said if some people saved rather than spent their government checks, they'll need that savings when they have to make up missed rent and mortgage payments. In Washington, Irv Chapman, Bloomberg Radio.
Lawmakers paid tribute today to Officer Brian Sicknick, the Capitol Police officer who died from injuries sustained in the attack on the Capitol. Senate Majority Leader Chuck Schumer spoke at a special ceremony earlier in the day.
That Brian and his family were made to pay such a high price for his devoted service in the Capitol was a senseless tragedy, one that we are still grappling with.
Officer Sicknick is the 5th person to lie in honor at the Capitol, a distinction reserved for private citizens. Government officials like former presidents lie in state. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser along with Tim Stanovic. And good story on the Bloomberg by a team of reporters, including Sarah Ponzak, who's often here on Bloomberg Business Week. And the headline on it, Robinhood Crisis Reveals Hidden Costs in Zero-Fee Trading Model. I always feel like it's never zero, is it?
I'm not going to repeat what everybody says, right? If it's
too good to be true.
Exactly. And look, as Missy and Sarah write, quote, turns out no-fee stock trades can exact a very high price after all. There is a big debate happening right now about how to pay for no-fee trades. I mean, the way Robinhood makes a lot of its money is through payment for order flow. And earlier this week, we saw one of the Robinhood competitors, Public, actually come out and say, hey, we are no longer going to accept payment for order flow. We are changing our business model around, and we are going to try this tipping model.
Which means what? What's the difference here?
If people tip the same way that you see with I don't know if it's GoFundMe, but you know those crowdfunding platforms,
right?
Where they no longer take a percentage of the donation that you make,
right?
Instead, they say at the end, do you want to add a tip to that? That's the way that I took to understand.
So does this make it more subjective or less subjective potentially?
Well, it means that people can choose to pay what they want to pay to make a trade. That's the way that I'm interpreting it. I mean, I think there's a big question as to how this will play out.
Yeah, I mean, listen, I think it's interesting. I think we're finding new ways as the financial sector is disrupted. I think this move to zero or seemingly zero fee commissions certainly has impacted how retail investors can trade. But, you know, I love what she says. The two reporters in this story is that things can quickly and recklessly devolve into mob rule. Like things can change quickly, and we saw that play out here.
And that's, you know, it's sort of the postmortem of this story, and we were talking about this as it was happening. The big difference among the many big differences between what happened last week and what happened in the 90s when it came into message boards is just the accessibility with these no-fee trading platforms. You can do it from your phone, you can trade options very easily, and it doesn't cost money. That stuff didn't exist in the 90s.
Before we end, GameStop, you wanted to mention.
Yeah, I wanted to make a quick correction. When we were talking to Dave, I said GameStop stock was at its single digits a few weeks ago. In fact, it was just under $20.
All right, good stuff. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are climbing after earnings reports. Banks are rallying. J.P. Morgan and Morgan Stanley analysts have joined those bullish bank calls. Stocks are extending gains into a third day as investors take apart corporate earnings reports. S&P up 17 right now, a gain of 0.5%. The Dow's up 70, higher by 0.2%. NASDAQ at a record, up 66, up by 0.5%. 10-years down 9/32, 10-year yield 1.12%. Gold down 0.2%, 18.34 the ounce. Silver up by 1.8%. And right now, West Texas Intermediate crude up 1.6%, 55.65 a barrel. After the bell, we'll be hearing from Qualcomm. Shares lower now by 1.4%. eBay up 2.2%. PayPal, which is also based in San Jose, California, up by 1.5%. Recapping, S&P up 17, up 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Jeff Bezos, a household CEO name. Do you want to actually mention that GameStop thing again?
Oh, yeah, I do. Thank you. So earlier we were talking to Dave Wilson, and I said that GameStop stock had fallen had been in the single digits just a few weeks ago. I was getting it confused with AMC, so I want to correct myself. It had fallen to, it had come from just about $18, $19, $20 a few weeks ago.
All right, so good to clarify since we've been watching the moves. We've also been watching the moves at Amazon in terms of changing the CEO job. Jeff Bezos, a household CEO name, and I'm guessing now, Tim, that will become true for the new Amazon CEO who's taking on the top leadership job at the world's largest online retailer. We're talking about Andy Jassy. Let's get more about Jassy. Bloomberg News technology reporter Matt Day joining us on the phone from Seattle. Matt, great to have you here with us. What do we need to know about Andy Jassy?
So a few things. He's an Amazon lifer. He joined in 1997 at a Harvard Business School. So he's been, in Bezos' shadow for quite a while. He was actually the first sort of chief of staff to Bezos when they first established that role at Amazon. He was very much in the mold of the executive he's been following for quite some time there.
And what about when it comes to his role with Amazon Web Services? I mean, Amazon Web Services is by far the most profitable segment when it comes to Amazon, but it's by no means the biggest.
That's right. I think people were surprised, it's just 5-6 years ago now when Amazon first broke out the revenue from Amazon Web Services. Andy Jassy's led it since its inception. It is the biggest profit driver for the company. It's really reshaped how corporations of all sizes buy their own technology. They're far and away the leading cloud computing company. I think his promotion really underlines the value of this wonky tech business to what a lot of people think of as a primarily retail company.
Matt, I love your story, and you really get into who this guy is. And I'm curious, it sounds like Jassy understood the potential for something like Amazon Web Services way before anyone else. I always talk about the time years ago when the Bloomberg story came out and it was like, if you were streaming XYZ last night, you probably were doing it through an Amazon web server. And we were like, what? Wait, what is this business that Amazon's into? What was it that Jassy saw and that enabled him to kind of just get out there and, in many ways, own this market?
So Jassy and Bezos and a few other Amazon executives, 15 years ago now, they looked at the way that companies buy technology, run technology, and realized it was all, kind of cumbersome and complicated to string together. So they worked to simplify it to its simplest parts, right? And that's really what they launched with. Here's an online storage service. Here's an online, the equivalent of processing power, raw computer chips for rent, essentially. And by kind of breaking it down into its simplest parts, they made a really, really simple case that, maybe customers wanted to string all this together themselves, and they were proved right by that. Folks did want that kind of simplicity and ease of use, and it's really reshaped things.
What about when it comes to Jeff Bezos's management style? You said that Jassy has been at Amazon as a lifer. What does it mean in terms of how he's going to lead Amazon, similarly or different than Jeff Bezos has led it?
He's definitely in the Bezos mold in terms of how he structures his team, right? There's these legendary weekly meetings he'll have where they dive into data and try to pick out trends and kind of lead with the customer and lead with the numbers. That's very Bezosian in the way that he's structured it. I think it's too soon to tell how he's going to bring, what change he might bring rather to the retail side of the business. he's been diving into cloud for a very long time. And though he's been in all the top meetings, he hasn't been running day-to-day operations for the company's sprawling other divisions. So I think the expectation is for a similar style to Bezos, and then maybe something different as he gets his hands into the other elements of the company.
Well, that's what I want to ask you, because you said very much in the mold of Jeff Bezos, which could be an incredible thing and certainly be calming to investors right now. But at the same time, what does Amazon need in a CEO going forward? Especially then you still have the safety net of Jeff Bezos being around.
Well, I think Bezos would probably say that Amazon still needs to make big bets. Because they are a giant company, and I think they get the reputation for sort of winning in every market they enter. Amazon doesn't see it that way. They look around and they see fierce competitors in every area in which they play, whether it's Walmart, retail, Microsoft, and cloud. There's plenty of others down the line. And so I think the marching orders for him coming in, certainly as Bezos would project it, is to keep making those kind of large bets that can move the needle for what's already a $1.7 trillion company.
Hey, Matt, what does this mean for Amazon Web Services now? Because, look, since Amazon established AWS years ago, there's so much more competition, and there's also pricing pressure.
Yeah, for sure, and it's been a little bit of a debate in the financial analyst community. What threat do Microsoft and Google, who are very much following the AWS playbook, what threat do they present to Amazon's cash cow? I think this elevation certainly answers the does Amazon want to cleave off Amazon Web Services conversation. It's been a long point of debate about whether it would be worthwhile to spin off that unit just because of the obvious differences from the retail business. Jassy taking the top role probably cools that for a little bit anyway.
Right, because do they in some ways, it provides them a bit of a cushion to have that company part of, the Amazon umbrella at this point?
Oh, absolutely. But I think there's been some drag from the, if you're sitting on the AWS side anyway, just all of the sort of political entanglements that Amazon has found itself in thanks to its market power in retail and some of the personal feuds between former President Trump and Jeff Bezos. I think if Andy were being a little candid, Andy Jassy, he might admit that being related to Amazon has maybe hurt AWS in some sales conversations over the years. So it's a tricky political line to navigate for those two units.
And it's interesting, too, that you say, while they are similar creatures, Andy, he's very much into philanthropy, which is something that's
new to Jeff Bezos, I think.
Yeah, and Amazon, I think, overall, some would say. So great story. Matt, really appreciate it. Matt Day, tech reporter at Bloomberg News. Headline crossing, SEC hunting fraud in the social media post that drove up shares of GameStop. So continue to see regulators getting involved.
Wow, the big question is what were regulators going to do or could they do? And we're starting to get a little more light there.
Exactly. You're listening to Bloomberg Business Week. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic in our Interactive Brokers studio. Let's not forget, we are watching a lot of different corporate stories, but we are also watching the vaccine and the virus.
That's right. In just a minute, we're going to be speaking to Bishop T.D. Jakes, chairman of the T.D. Jakes Foundation, on Conversations with America, understanding the COVID-19 vaccine.
Yeah, who recently caught up with Dr. Anthony Fauci, so we'll see what lessons they got from that conversation. All right, let's get back to your top business stories and a look at that trading day. Here is Charlie Pellet.
Hi, thank you very much. Do want to begin with a headline that you brought us a couple of minutes ago. Sources say the SEC is combing social media and message boards for signs that fraud played a role in dizzying stock swings for GameStop, AMC Entertainment Holdings, and other companies. Those names are trading higher today. GameStop up by another 14.1% after yesterday's decline. AMC Entertainment bouncing back up by 18.2%. It is an up day on Wall Street. Stocks are extending gains into a third day as investors assess corporate earnings. Treasuries are retreating while oil is climbing. Right now we have got the 10-year down 9.30 seconds. 10-year yield 1.12%. West Texas Intermediate crude up 1.7%. 55.69 a barrel on WTI. Gold is down 0.2%. Silver up by 1.8%. S&P up 19, up 0.5%. The Dow up 82, up 0.3%. NASDAQ trading at a record up 80 points, just about the high of the day, up now by 0.6%. So an up day on Wall Street. AstraZeneca and GlaxoSmithKline have joined the rush to develop a new generation of vaccines against emerging variants of the coronavirus that could make the first shots less effective. In the U.S., 1.32 million doses were delivered each day on average during the past week, according to data compiled by Bloomberg. Amid the optimism about vaccines, there is concern, though, about complacency. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health.
Whenever we start to see the numbers drop, there is this concern that people will start to relax their behaviors, start to take fewer precautions, and then we'll see that spike again. But the hope here is that we actually are getting a hold on the virus, both with the social distancing measures, with a better understanding of masking, and then with these vaccines rolling out.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we are following, AstraZeneca, little change, down by about 0.1%. Pfizer down 0.2%. BioNTech moving higher by 3%. Moderna up now by 4.7%. Johnson & Johnson down 0.2%. Recapping, stocks higher. S&P up 19, up 0.5%. NASDAQ is at a record. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So just a few days ago, the Associated Press came out with an analysis of 17 U.S. states and 2 cities, and they found that black people inoculated with the COVID-19 vaccine, Tim, at disproportionately low levels. So once again, we see these inequities.
It's not just happening nationwide, but here in New York City as well.
Yeah, we definitely see that. So let's see what Bishop T.D. Jakes has to say about that. Chairman of T.D. Jakes Foundation. He's on the phone once again with us from Dallas. Bishop Jakes, good to have you here with us. And I know this is something that has been front and center for you. You all recently hosted an event that included Dr. Anthony Fauci to get a better understanding of the COVID-19 vaccine. Talk to us about that event and what the takeaways were from Dr. Fauci.
First of all, it's a pleasure to be with you, Carol, and to be with you, Tim, today. We did Conversation with America, which anybody can go see on T.D. Jakes' YouTube channel. And we did an extensive conversation with Dr. Kizzmekia Corbett and Dr. Ogoago from Yale University, and she's from the Institute of Allergy and Infectious Diseases, and of course, Dr. Fauci, just to aggregate information and ask some questions that would help to alleviate some concerns or address some of the concerns that are prevalent in the African American community.
Do you think those concerns, Bishop Jakes, are being addressed? Are you hearing that those concerns are shifting as we learn more and more about the vaccines?
I think that they are gradually shifting in certain pockets. Of course, the African American community is not a monolith. And so depending on your age and who you congregate or coalesce with, your perception of the situation might be varied according to your age group and how closely associated you are with the tremendous amount of deaths that we are seeing. Being a pastor also, I'm abundantly aware of how many funerals we're conducting and really have a front row seat on the families behind the numbers. So it's very apparent to me that we are definitely losing lives at a much larger rate than our white counterparts. And so it was really important to me to use our platform to level the playing field and get out adequate and accurate information so that people can make their own determination.
Right. The CDC did come out, and they've talked about Black, Hispanic, and Native American people dying from COVID-19 at almost 3 times the rate of white people. So, Bishop Jakes, do you feel like things are improving, that there's more information out there, maybe education to put the Black community maybe more at ease so that they will up in terms of their numbers for getting the vaccine?
My biggest concern is that even where the attitude is improving, the access is not. So we're only having about 10% penetration into the Black community where it is accessible, particularly to our older citizens, where they can easily get in for one and then come back and get the second vaccination that's necessary to secure some relative safety from being infected. And so that is a problem. Accessibility is a problem. And then dispelling this continues to be a challenge. I think it's something that we're going to be working on all through first and second quarter of the year, probably into the third quarter, getting them comfortable, just due to the fact that we've had so many historical disparaging incidents that have occurred between health professionals, government officials, and the Black community that have continued to cause an angst and an anxiety amongst people of color in trust associated with taking the vaccination.
Right. I think it's important to keep in mind there is historical context and lots of reason for people to be skeptical, especially in the Black community about this. Very briefly, you are a great communicator. You have more than 4 million Twitter followers. You've built up a huge following. What is the right way for the Biden administration or even local officials to communicate in communities throughout the United States that this is a vaccine that is safe and that people need to get?
I think that the community most trust its own leadership. There are various leaders. The faith community is one aspect of it, but also personalities of interest that also have coalesced huge followings of people that they trust their motives. I think that's one aspect of it. And I think everyday people off the street influence people more than even personalities do. So I think they have to use a multi-pronged approach in order to dispel this. And unfortunately, you're also fighting the onslaught of social media and wrong information being perpetuated through all of those vehicles.
Well, and I think everyone hopes, too, that as people see more and more people get the vaccine and as time goes on and hopefully with safe outcomes, that more people will step up and take it. Bishop Jakes, always good to check in with you. Be well. Chairman of the T.D. Jakes Foundation on the phone from Dallas. Back to World and National News. Back to Nancy Lyons. Hey, Nance.
Hey, Carol. Democrats have reached an agreement with Republicans to organize the evenly split Senate. The deal with Senate Republican leader Mitch McConnell ends a standoff that prevented the new Democratic majority from setting up some operations. Officer Brian Sicknick received a special farewell today in the Capitol Rotunda. Senate Majority Leader Chuck Schumer paid tribute to the Capitol police officer who was killed in the riot on the Capitol.
Today we gather to honor Officer Brian Sicknick, a New Jersey native, a National Air Guard veteran, and a 12-year member of the Capitol Police Force.
Sicknick is being buried at Arlington National Cemetery. Pete Buttigieg has been sworn in as the Secretary of the Transportation Department. Vice President Kamala Harris administered the oath.
I, Peter Buttigieg.
I, Peter Buttigieg.
Do solemnly swear.
Do solemnly swear.
That I will support and defend.
That I will support and defend.
Buttigieg is expected to play an important role in promoting President Biden's sweeping green initiatives, helping to oversee stronger automotive fuel economy standards to reduce greenhouse gas emissions, and to support the president's push later this year on a $2 trillion climate and infrastructure plan. The Justice Department is dropping its discrimination lawsuit against Yale University that had alleged the university was illegally discriminating against Asian American and white applicants. The department says in its filing it was voluntarily dismissing the action. It still needs, though, approval of a judge. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week, and we do want to go over some of the virus headlines. Did you see the one about the UK Health Secretary, Tim? Matt Hancock said the 2011 movie Contagion, depicting the breakdown of society during the pandemic, influenced his planning for the vaccines rollout.
I sure did, and you're the third colleague of mine to ask me if I've seen that. Obviously, this is something that is really interesting.
Listen,
I saw that this morning, and I was like, okay, what is the fiction becomes? What there's like a term that I'm totally missing there.
Life.
Tweet it at us, please, people.
Yes,
okay?
help us,
save us.
Life mirroring, yeah.
Anyway, that's what I was thinking.
But yeah, exactly. Well, listen, I think, is it life mirroring art or something like that? Or I don't know. We'll figure it out. Somebody will come at us. No, but listen, I think for a lot of individuals, a pandemic was something you saw in the movies, right? And so it wasn't a reality. So it's interesting to see kind of what somebody was thinking about or how it might play out. Having said that, I feel like every day we are seeing more and more and different companies stepping up. AstraZeneca and University of Oxford, they're starting to look at how to re-engineer their virus vaccines to defeat new mutations. Glaxo agreeing to work with CureVac to help boost production of its experimental vaccine and improve the shot to help protect against multiple variants. So I feel like it's just starting to layer, and we're getting more and more here.
It is, but at the same time, we are seeing the loosening of restrictions in cities and states around the country. New Jersey Governor Phil Murphy loosening indoor capacity restrictions for restaurants and other businesses to 35% from 25%. New York also expanding vaccine eligibility to include taxi drivers and restaurant workers. That's 2 weeks before indoor dining is scheduled to reopen.
Yeah, that is kind of interesting, and I think you and I have talked about this a lot, and I do wonder whether, do we need to be concerned that as we start to reopen again with these variants still coming out and not as many people getting the vaccine, whether that's
that's something we've talked about a lot. It is surprising to see the loosening of restrictions when we are just starting to see these new variants spread.
Is it the relationship between art and reality? No, it isn't. All right, we're going to figure this one out. I've been Googling and I can't find it. You're listening to Bloomberg Business Week. This is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Best level of the day on the Dow Jones Industrial Average. NASDAQ is at a record. S&P pushing higher right to the numbers. We'll give you the why in a moment here. The Dow up 102 right now. That is a gain of 0.3%. S&P up 18, close to session highs, up 0.5%. NASDAQ up 70. That is a gain of 0.5%, extending the gains for the year for NASDAQ to 6.15%. 10-year down 9/30 seconds, 10-year yield 1.12%. Gold down $4 the ounce, down 0.2%, 18.33. And silver up now by 1.8%. West Texas Intermediate crude up 1.8%, 55.73 a barrel. Stocks are extending gains into a third day. Investors assessing corporate earnings. As I mentioned, Treasuries retreating and oil is climbing. Recapping, stocks are moving higher. S&P 500 index up now by 17, a gain of 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks very much, Charlie. Well, February is Black History Month, and throughout this month, Bloomberg will be celebrating pivotal moments in U.S. Black history. Let's get more on that. Here is Bloomberg's Renita Young.
On this day in Black history in 1870, the 15th Amendment of the Constitution of the United States was ratified. This guaranteed the right to vote regardless of race. It also intended to ensure with the 14th Amendment the civil rights of former slaves. But many Black people would not actually be able to practice this right to vote until the 1965 Voting Rights Act. It gave African Americans a way to get around barriers at the state and local levels that had previously prevented them from exercising the right to vote. That's Today in Black History. I'm Renita Young, Bloomberg Radio.
All right, Renita, thank you so much. Well, I got to say, Tim, I've lost count how many COVID-related cover stories Bob Langreth has done for Business Week. He's covered Gilead, Remdesivir. He's covered the White House COVID outbreak. It has been so many different stories, and we've learned so much from him.
Yeah, we certainly have. And this one is the cover story, and the cover of Bloomberg Business Week this week is ready for the next one, and it features a large picture of a bat.
Yes, it does. So it's really kind of warning us. Here's what we've got to do to be ready for the next one. Let's get into it with Bob. He is healthcare reporter at Bloomberg News on the phone in New Jersey, along with Bloomberg Business Week editor Joel Weber on the Access line in Brooklyn. It's a reminder, Joel, there will be more pandemics and epidemiological crises if we've got a plan for it.
Well, we need a plan for it, and you know that the cover line there, ready for the next one. It ends with a question mark, like ready for the next one. And right now we are not. And what Bob did and reported out here, and I've lost track of how many cover stories Bob's done over the course of the last year for us. It's been truly amazing. But what he really maps out here is the 5-point plan, and if we were to get on it and jump all over this 5-point plan, we might find ourselves in a pretty decent place, certainly a better one than we found ourselves in a year ago, right about now. And Bob, along the way, you also got some exclusive reporting about how close we were to actually maybe having a leg up on viruses like this. So walk us through what you learned as you reported out your cover story.
Yeah, so it turns out, as I did this reporting, that there were a lot of people thinking about this and interested, years they didn't know it was going to be a coronavirus, but everyone knew something was coming eventually, the infectious disease experts did. And there were people that were thinking about how to prepare and how to do things, but there just wasn't the willpower and energy to get it done. And one company, GlaxoSmithKline, I found out through my reporting, actually proposed a whole kind of epidemic preparedness vaccine research center. They proposed this to the U.S. government, to BARDA, which is what's funding a lot of the vaccines now. It's a small agency funding a lot of the vaccines now. And they proposed a research center that have looked in specifically into messenger RNA vaccines. That's one of the successful vaccines, and adenovirus-based vaccine. That's the other type of vaccine that's been successful. And the idea was they would have taken everything that looked worrisome and gotten prototype vaccines into early trials so they could be ready to go and invent the next epidemic, but it just didn't happen. So we weren't quite as prepared, as we should have been.
Right, and we should have been, right? We could have been. That's the whole point.
And the cost of this thing, would have been $595 million over 10 years, which I guess sounded like a lot, 3 or 4 years ago, but compared to the cost we've had to bear now through this pandemic, is just nothing like that. Now people are kind of dusting off versions of this proposal and saying, let's do it again. Let's do something similar. And some of these ideas are out there. So what we need is the willpower to do it. And another idea that's out there is to form. One of the problems we had is good data on the right at these key moments when epidemics are starting to emerge. It's sort of like early in a forest fire. You got to identify it and identify the threats really soon and act. And for that, you need really, really good surveillance and really, really, really good data. And one of the ideas that's out there is to form sort of a national weather service-style agency that would model, upcoming emerging viruses and pandemics and come up with forecasts that were more reliable, to warn people, tell them, what's coming or what might be coming, and give politicians kind of the fortitude and cover to act.
What about when the
Biden administration is looking into?
What about when it comes to international cooperation and making sure there is international cooperation for the next pandemic? One of the key themes that you highlight is repairing and augmenting the WHO.
Yeah, and this is probably, this is an area that people are talking about, and it's probably the trickiest, most difficult area to fix or improve or reform, because the basic problem we have is, that the viruses, they cross borders. They don't care about, countries and international borders or, which political regime is in power. They go everywhere, and that's what we found. And yet, so we want countries to cooperate as much as possible in kind of reporting the early stages of the pandemic. But the problem is no one really has the authority to do that. And if countries that don't report on time because they don't want to admit the scope of the problem, it might hurt their economy, et cetera. We've seen this again and again. Then the world is a step behind. And the WHO, it doesn't have a lot of teeth. That's just the way it's structured. So there's rumblings and discussions of what else can we do? What can we give the WHO more teeth? Or can we add to it? Give some other group sort of it was called like a NATO for emerging viruses, biological NATO.
Right.
Would have a little more power, maybe a group of like-minded nations to prepare. So that's this kind of idea that's out there that people are trying to formulate and trying to figure out what to do. But that's probably the single most difficult area.
Bob, another thing that you talk about in the story is effectively how blind we're flying right now, especially as these variants start to come at us. And really the solution there is genetic sequencing. How can we improve our genetic sequencing, which is almost like non-existent at this point in the U.S.?
Yeah, I mean, that should be one of the simpler areas to fix. I mean, we have the technology is there. We have the technology. We just kind of haven't applied this on a national scale and made it a priority, and then, which, some other countries have done. They're far ahead of us on this. I think we sequence about 3 out of 1,000 cases of the virus. So we just get a tiny, tiny sampling. And some other countries like England are doing 5%, and some smaller countries are even doing more. So we're kind of way, way behind. And this is something just basically a national effort and making a national priority that would just make a big difference. And the other thing that needs to be done is there needs to be an effort to kind of push more of the sequencing expertise. Because we're a federal system, a lot of things are in states and local public health labs. We need an effort to push a lot of the expertise out into state and local public health labs that are doing the contact tracing. But this is fixable. Someone just needs to make it a priority.
Yeah, it's really logical. And you have 4 and 5, you say developing more vaccines faster for those kind of worrisome virus classes that are out there. Like, let's start working on them now. And also a big one, which we know has been a problem, ironing out distribution and logistics. It's the cover story of the U.S. Bloomberg Business Week, and we'll put that out on Twitter. But it's a great kind of 5-point list of things that we need to do. Bob, thank you so much. Really appreciate it. Bob Landgraf, he is healthcare reporter at Bloomberg News. All of his reporting on COVID has been incredible. Our thanks to Business Week editor Jill Weber on the Access line in Brooklyn. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue if you're listening on Bloomberg 106.1 in Boston. Bay State Business is coming up next. Coming up next, a deep dive with Brad Stone.
Yeah, he literally wrote the book on Amazon. I'm excited about this one. This is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, February 3rd. Stocks are moving higher. NASDAQ right now trading at a record. We've got the Dow, the S&P higher as well. Stocks are extending gains into a third day as investors assess corporate earnings. After the retail trading frenzy subsided, Treasuries retreated. Right now we have got the 10-year yielding 1.12%. 10-year down 9/30 seconds. S&P up 14, up 0.4%. The Dow off session highs, still up 83, a gain there of 0.3%. Have been up by about 100 a few minutes ago. NASDAQ at a record, up 51 for the NASDAQ Composite Index. That is a gain right now of 0.4%. NASDAQ 100 Index is advancing as well, up now by 0.1%. Dow Transport's up 0.2%. Russell 2000 up by 0.5. Gold down 0.3%, and silver pushing higher again today, up now by just about 1.7%. Wall Street's looking ahead to Friday morning's jobs report. Megan Green is a senior fellow at the Harvard Kennedy School.
The number of new jobs generated will depend in part on seasonals. Usually you have a lot of seasonal workers who are laid off in January, but we didn't have that many seasonal workers to begin with this time around. So the range on estimates is incredibly wide. But I do think that we've seen evidence of scarring in the labor market with jobless claims. We've seen them tick back up. And so the non-farm payrolls number, actually the headline number will matter more than it usually does.
And, of course, complete coverage heading into the report. And as that number breaks, as usual, 8:30 a.m. Wall Street time. General Motors is warning that a semiconductor shortage will impact production in 2021, with supply for the global industry remaining very fluid. GM shares up right now by 2.8%. Rival Ford also up, trading higher by just about 2.8%. Rival Ford also up, trading higher by just about 2.8%. Daimler will split up the world's largest makers of luxury cars and commercial vehicles, renaming itself Mercedes-Benz and listing its truck unit separately by year-end. Shares of Daimler up by 6.4%. Recapping S&P up 15, up 0.4%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So it's the story that broke late yesterday, the business story heard around the globe, safe to say, right?
Yeah, I don't know what you're talking about, Carol.
Jeff Bezos, hey Tim, stepping down as CEO.
Yeah, look, when you think of Amazon, you think of Jeff Bezos. It started in his garage in the 1990s, took it public a couple years after starting it. The guy has been running it since then.
Yeah, and as our Brad Stone writes, the move seemed like, despite being a surprise, seemed like the natural next step and opens up really a new age for the world's largest online retailer. So let's get into it with our go-to voice on everything Amazon. He's Brad Stone, Senior Executive Editor of Global Technology, author of The Everything Store, Jeff Bezos, and the Age of Amazon. And Brad's got a new book coming out, too, that's on Amazon called Amazon Unbound. And Brad joins us on the phone in San Francisco. That book comes out in May, available for pre-order. So you are such our Amazon insider, Amazon veteran, but you were surprised by this news.
Right, Carol. I was telling Tim actually earlier today that I think I, uttered a loud expletive when I saw the news. In some ways, it does feel like a natural progression and a formalization of the status quo at Amazon, where he's really been working on new things and allowing his deputies to run the bigger businesses. But it's also surprising. I mean, this is someone who, micromanaged his businesses, whose identity is wrapped up in Amazon, who obviously took and deserves a lot of credit for the remarkable rise of this company over the past 25 years, $1.7 trillion in market cap. So it's hard to imagine him moving on. It's probably going to be a little bit of a test of Andy Jassy to see how much room he has and can take to operate with Bezos still there as executive chairman and placing a lot of these big bets.
Were you surprised at all by Andy Jassy being the person who was named to fill Bezos' shoes?
Not at all. And in some respects, though, you kind of look back and you wonder whether this has been in the works for a while. So there was a lot of speculation about the succession plan and whether it was Jassy or Jeff Wilke. Wilke was another deputy who for many years ran the retail group. Before that, really architected Amazon's supply chain. he was a possibility to take over as well. And then last year we found out that Wilkie was going to retire in January of 2021. So who knows? Maybe the writing was on the wall and he saw it. But where it does make sense is Jassy has, built this amazing business, AWS, a $50 billion run rate, really changed the way companies and governments and universities buy their technology. Now they do it in the cloud rather than servers in the back room. He's changed enterprise computing. You've got Microsoft and Google and IBM and Oracle pursuing Amazon. But Jassy also has the full handle on the full company because he sat on the S team. He's been a part of major decisions like where to put HQ2 and whether to buy Whole Foods. And when he started at the company in the late 90s, he worked in the retail group. So he really had the full scope of the company, and it kind of makes sense that he'd be the guy to step up.
All right, I have to say that in your story, I was drawn to this. You say Bezos' decision to step down also reflects an uncomfortable reality for one of the wealthiest people in the world, and that is the walls of his highly compartmentalized empire have been crumbling for some time. I don't look at Amazon, Brad, typically and think of it as crumbling, but so what do you mean?
Right. Well, actually, that's a good point, Carol. So, and this is a theme of my upcoming book. Bezos, is the largest shareholder and the outgoing CEO of Amazon, but he also owns the Washington Post personally. He has a private space company, Blue Origin. He's got an investment fund and a family office. And he's got these philanthropies now, the Day One Fund and the Bezos Climate Fund, or the Bezos Earth Fund. And there's a lot of pressure on him to give away his money. And over the past few years, we've seen a collision in all these assets. So the Washington Post made life very difficult for Amazon during the Trump administration. You've got union organizers and workers protesting Amazon's treatment of its warehouse workers in front of Bezos' personal properties, homes around the country. And as he's been trying to give away his money to climate organizations, they've expressed concern about Amazon's climate impact and its relationship with organized labor. So that's what I mean by the walls kind of crumbling. Yeah. He can't keep everything compartmentalized anymore.
You also have this anecdote about him traveling to India in the early part of last year and Prime Minister Narendra Modi declining to meet with him because of the Post's coverage of the country. I guess my question is, can you then, with Jeff Bezos as executive chairman but no longer as CEO, will that help solve some of these issues, or is he inextricably bound to Amazon?
Yeah, that's a great point, Tim. He can't escape it that easily. For guidance, we can kind of look to Bill Gates, though, right? Who was really seen 20 years ago as a monopolist, sharp business elbows. The way the U.S. government's coming down on Microsoft, and now he's really a roving philanthropist, diplomat who's been a leader in this pandemic crisis. So, yeah, in the short term, no. I mean, Jeff obviously can't outrun Amazon, and he'll be inextricably linked to the company and all of its political issues. But maybe over the long term, as Bill Gates has done, he can kind of chart a path for himself as a more independent philanthropist.
Listen, and Jeff made it very clear, Brad, that he's not retiring. So where will he spend most of his time going forward?
It's all going to be about the geeky inventions and the bets that he thinks could lead to Amazon's next wave of growth. And this is one of those things that I observed reporting in the new book. He loves to micromanage and really get into the weeds of the new things. So I'm going to mute my Alexa before I say the word Alexa, so it doesn't respond. But he really micromanaged Alexa. The cashierless Amazon Go stores, he was deeply involved in that. The healthcare initiatives Amazon is trying, Project Kuiper, which is this very expensive effort to get satellites into space and to sell internet access. He's involved in that. And, he sees these as big bets. He's really an inventor at heart. I'm sure they'll read him into the big decisions. They call them one-way doors, kind of Amazon lingo for decisions that can't be reversed. But I expect that in addition to all the other stuff, he's going to continue to basically geek out at Amazon.
Love that. Hey, hang on for a second. We're going to do a little bit of news, Brad. We'll come back with you. We're going to come back with Senior Executive Editor of Global Tech at Bloomberg, Brad Stone. Right now, check on World and National News. Nancy Lyons in D.C. Hey, Nancy.
Hey, Carol. President Biden has been sharing his pandemic relief priorities with congressional Democrats today, saying he will not back any stimulus checks less than $1,400. Bloomberg's Emily Wilkins says he believes that promise is what led to the Democratic Senate victories in Georgia.
So it's obviously something that Biden thinks has helped the Democrats win these elections, and he wants to make sure that he is going through on that promise.
Biden has said he is open to considering tighter eligibility requirements for the checks. Senate Republicans have proposed issuing $1,000 payments. As for COVID-19 itself, deaths are down in the country following the holiday surge. Cases, too, look substantially lower than normal, but CDC Director Dr. Rochelle Walensky warns that's only when compared to holiday numbers.
Cases remain extraordinarily high, still twice as high as the peak number of cases over the summer.
She says the way to prevent mutant versions of the virus to take hold, Americans need to follow CDC guidelines and wear a mask and social distance. Authorities are preparing for Super Bowl 55 this week in Tampa, with the Kansas City Chiefs facing off against the hometown team, the Tampa Bay Bucks. But security is tight. Acting Deputy Homeland Security Secretary David Pekoski says authorities are watching for possible threats.
At this time, one particular area of concern is domestic violent extremism. While there is no specific or credible threat to Super Bowl 55, it is a high-profile event, and security preparations are designed accordingly.
New fencing is going up around Tampa's downtown. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, thanks, Nance. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. And listen, we're going to get back to Brad Stone, who really is, has literally written the book on Amazon, is writing another one, and has really figured out, how this company became what it is today, and really is looking at where it goes tomorrow. In the meantime, let's not forget that yesterday, after the close, we were all eagerly awaiting Amazon earnings. We always do. We wanted to see how the pandemic, continued to impact them. So we were expected to break down the numbers, which we did. And then all of a sudden, we got the headline on Jeff Bezos stepping down as CEO. But let's not forget that Amazon breached the $1 billion a day revenue mark in 2020. It's just another example of the scale of this company and success of this company.
Right. I think it's a really good way to think about and contextualize the numbers when it comes to the company's revenue. $386 billion in terms of full year revenue, meaning more than $1 billion a day is what it brings in. ExxonMobil has hit this in the past, but it does give good context as to how big Amazon has gotten and how much of our daily lives it touches.
Yeah, my husband and I were actually talking about this morning that just how much they have become a part of our lives in so many different ways.
Look, if you're talking about streaming, you're talking about Amazon.
Check.
Yeah, it's streaming. You're talking about Prime,
Check.
right?
Yeah.
You're talking about Whole Foods and getting your groceries.
Exactly.
And then, Carol, as you brought up earlier today, Amazon Web Services is sort of the backbone infrastructure of the internet. You're using it with services and apps that you don't necessarily know you're using it when it comes to Amazon Web Services.
Yeah, exactly. And what's interesting, too, and we just talked earlier with our Matt Day about Andy Jassy, who takes over as the CEO, and we got another story on the Bloomberg that says he's committed to making video games specifically. So we're starting to get, a better feel, too, of, how this company, what it will mean going forward. And we're going to get back to Brad and talk a little bit more about that.
Yeah, on the video games note, a great article out this week by our colleagues Jason Schreier talking all about how the video game experiment hasn't been that successful compared with what everything else Amazon has done. It's a fantastic read. I encourage everyone to check it out.
And we can put that one out too on Twitter as well. We're going to get back to Brad Stone of Bloomberg. He's our senior executive editor of Global Tech. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. NASDAQ set a record. Stocks are moving higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are trading higher today after some morning weakness. The Dow is currently up 76 points. S&P's gained 13, while NASDAQ rises 34. The U.S. 10 yield at 1.13%. Gold is down 5, and transports gained 23 points. Among the main 11 S&P sectors, leaders were energy and telecom. Healthcare was under pressure. And leaders to the upside in the Dow were Boeing and Chevron, while Amgen and Travelers led to the downside. After earnings, Amazon fell 1.1%. Google rose 9%. And in other news, Amazon's incoming CEO says he's committed to making video games, and GM says that semiconductor shortage will impact output in 2021. Wrapping things up, Qualcomm reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Very much, Bill, and to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. We are getting back to the story. I think it's fair to say, Carol, we can call this the story of the week. I mean, if you've been following Amazon at all, even, superficially, Jeff Bezos is the name associated with the company. Yep. And the fact that he is stepping away after spending the vast majority of his professional life there is a very big deal. Unfortunately, we have Brad Stone on the phone with us from San Francisco. He's senior executive editor of Global Tech right here at Bloomberg News. He wrote The Everything Store a few years ago, and his new book, Amazon Unbound, is available for pre-order and comes out in May. Brad, I want to talk about space. When it comes to the wealthiest people in the world, Jeff Bezos is number 2. Elon Musk is number 1, according to the Bloomberg Billionaires Index. They are both involved in a new kind of space race. Where does Jeff Bezos stack up versus Elon Musk?
Right. Well, it's not a favorable juxtaposition, at least right now. I mean, SpaceX is launching, it seems, every week, the Dragon 9 to orbit, to the International Space Station. It's been testing, I guess, the Starship, the larger rocket, with kind of entertainingly exploded upon attempted landing yesterday. But SpaceX also announced that they're going to be bringing paying astronauts, paying tourists to orbit, and Blue Origin, frankly, hasn't really hit any of those benchmarks. It has always taken a more step-by-step approach. The first project is called New Shepard, and he wants to take, like Richard Branson, Blue Origin wants to take paying tourists to suborbital space, so the very edge of space. And they've been working on that for 15 years. And I gather, and I reported that they're hoping to take human passengers later this year. But that's going to be a big test for the CEO, Bob Smith, who joined a couple of years ago, to see whether they can really safely pull that off. And then Blue Origin's building a rocket called New Glenn, which will more directly compete with SpaceX's launch capacity. But that's delayed, and that's probably got a couple of years until it comes out of the factory. So Bezos spends a lot of money on this. They profess that it's not a competition, that they're taking their time, that there's lots of room for many winners in this growing category. But I know that I suspect and strongly suspect that the mismanagement there and the slow progress really frustrates Jeff Bezos.
Yeah, it's got to. And, Tim and I were talking in the break, Brad. I remember when it felt like these space companies, whether it was Branson, whether it was Elon Musk, whether it was Jeff Bezos, that it just seemed like a kind of a fun thing for billionaires. Elon Musk has shown it's a lot more serious than that and a real business going forward. I do wonder, speaking of fun, the timing of this. Is it just not as much fun to run the company? I'm just trying to understand a little bit about Jeff Bezos and his timing.
Well, we don't, of course, know for sure because they're being very circumspect in what they say. But we can take a couple of guesses as to why Bezos is moving on later this year from the CEO role to be executive chairman. And I think you're right. I mean, one of the factors is that the CEO of the company is going to be the guy getting grilled in Washington, getting grilled by the FTC, getting grilled in Brussels. And as we saw last year when Bezos had to testify in front of the House Antitrust Subcommittee, he would probably be rather doing other things. And you've got, Larry Page and Sergey Brin at Google is now completely invisible, and Sundar has to go answer the questions. So, yeah, I suspect he would rather be spending his time doing other things. But look, I think it's also that he wants to make a philanthropic contribution, and his time is pretty constrained. And also, there's he's earned he has a $200 billion fortune and probably wants to take it a little bit easier. So, and the fact that he's really not going anywhere and will continue to contribute at Amazon. So I think those are all part of the larger picture.
Brad, you mentioned before we went to break, talking about the initiatives that in the past Bezos has worked on, some of the hardware efforts, the company Alexa, for example. What does that tell you about what Bezos is thinking about as executive chairman? I mean, what are the sort of, borrow a Google phrase, the moonshots that the company is thinking about right now?
Yeah. Well, from a broad perspective, he believes that Amazon at the current size needs to take really big bets if it's going to continue growing. And so that's, where he's spending his time. He's focused on the kind of future horizon of technology, artificial intelligence, machine learning, satellite-borne internet access. Amazon has an ambitious project called Project Kuiper that competes with Elon Musk's Starlink as part of SpaceX.
There it is again.
Yeah, exactly. There's a real rivalry there. The healthcare initiative, they have a group inside Amazon that they call the Grand Challenge. And in a very Amazon-like way, they're not trying one thing, they're trying many things. So they have a telehealth service for employees that they're going to start offering to other companies. They have walk-in clinics. There are things that you can do with Alexa and ask it health questions. Of course, there was Haven Healthcare with J.P. Morgan and Berkshire Hathaway, which they just closed. Right. And I think Jeff's very, very involved in that and determining what experiments should proceed. So that's where he's going to spend his time to place those next bets.
All right, give us a 20-second tease, elevator pitch, or just a tease for your book coming out.
Amazon Unbound, coming in May. How did a company in 2013 with 150,000 employees and a $150 billion market cap turn into the $1.7 trillion company with 1.2 million employees? I chart the whole path in addition to Bezos' evolution into this international man of mystery and tabloid fascination.
Sounds great. I'm going to put my pre-order in.
You can already pre-order it now. Do it. I mean, look, the Everything Store was so good. I can't wait for this one, Brad.
All right, Brad Stone, Senior Executive Editor of Global Tech here at Bloomberg. You're listening to Bloomberg Radio, and this is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
This is Bloomberg Business Week. Carol Master, along with my co-host Tim Stanovic, in our Interactive Brokers studio. We're coming up on the chart of the day and the song of the day.
Chart of the day, song of the day. Dave Wilson, stocks editor right here at Bloomberg News, going to join us in just a few minutes.
Looking forward to it. See what he has to talk about. I wonder what's on his radar.
Oh, I know. I got a preview, but I'm not going to give it away.
Don't give it away. Let's get to Charlie Pellet with a check on your top business stories in that trading day. Just a little bit under a half an hour to go, Charlie.
Indeed, 28 minutes, and maybe we'll get a song having to do with earnings after the bell. Yeah, like there's a lot of those. But after the bell, we'll be hearing from Qualcomm, eBay, and PayPal, among many others. Stocks extending gains into a third day. Investors are assessing those corporate earnings reports. Treasuries retreated, and oil is climbing. Right to the numbers now. We begin with crude up 1.7%. WTI 55.69 a barrel. Brent, by comparison, 58.43, up 1.7%. Gold is down 0.3%, 18.33 the ounce. But silver up another 1.5% right now. Silver 26.80 the ounce. 10-year down 10.30 seconds. 10-year yield 1.13%. We've got the S&P up 9, up 0.3%. The Dow up 72, higher by 0.2%, and Nasdaq up 12. For Nasdaq, that is a gain now of just about 0.1%. So an update on Wall Street today. AstraZeneca and GlaxoSmithKline have joined the rush to develop a new generation of vaccines against emerging variants of the coronavirus that could make the first shots less effective. In the U.S., 1.3 million doses have been delivered each day on average during the past week, according to data compiled by Bloomberg. So as these vaccines roll out, when will those under 65 be eligible for vaccines? Lawrence Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health.
As more and more vaccines come online, you're going to start to see those numbers go down into the lower age ranges where the healthier, younger, less affected populations can start to access vaccine. And then we can start to see reopening activities that are safe and still protective of the broad population.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names, AstraZeneca shares little change, down 0.1%. Pfizer down 0.3%. BioNTech up 2.1%. Moderna up 4.1%. Johnson & Johnson down 0.2%. Palmetto Clean Technology, a solar and energy storage company focused on the residential market, has hired Deutsche Bank to evaluate potential mergers with special purpose acquisition companies. Recapping, stocks are moving higher. S&P up 9, now a gain of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg. Yes.
Do you know who this is?
Pat Benatar?
Yes.
Oh, wow. I didn't pick that up. Nicely done.
Anxiety. I think it's something New Yorkers can identify with.
Or hit me with your best shot.
True.
Speaking of the vaccine.
I like that.
So anxiety, Dave. I think Tim's right, though, man. New Yorkers, I feel like there's so many things that are giving us anxiety right now.
Oh, absolutely.
I'm placing a stop on profit for euro. Price I'm looking to place on 120.27. Okay, that's it.
To this indicator, I mean, ever since we went through that bear market in February and March of last year, and it's interesting, especially lately, because you've seen the VIX come down. The last 2 days, the indicator had its biggest percentage drop combined in 3 years, almost. I mean, it was down 23%. In a 2-day period, you think, oh, okay, things are finally settling down. Well, not really, because, it closed yesterday at about 25.5. And if you look at the index historically, going all the way back to 1990 when it was first calculated, which you can do on the Bloomberg terminal, surprise, surprise, you find out that the average is more like 19.5. And in fact, we're getting close to a year where you have not seen the VIX below that historic average. So even with the kind of settling we've seen the last 2 days, I mean, there's still a ways to go before, you get a sense that people are really settled. And, it's particularly interesting. I ran across a story on the terminal today from our equity team, Elena Popina, talking about how you've got, in essence, a mismatch with the VIX going on right now. Because the S&P 500 is close to a record, and you just don't see the VIX as high as it is now when that's the case. So, I mean, it's just sort of an interesting kind of contrast. But as far as the chart goes, folks, send me an email. I'll get it to you along with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So the point is, Dave, that you would anticipate that the VIX would be a lot higher considering the run-up that we've seen in stocks once again.
Actually, the opposite, Carol. There would be a lot lower because you got to remember, what happens with volatility tends to run counter to what's happening with share prices. So, we have.
Oh, that's right. We tend to see a lot of complacency, right, when the market's up.
Right.
That's
and
true.
then people don't want to pay so much for options. They don't figure they're going to pay off, or they don't need the insurance or whatever. And as a result of that, you see the VIX come down. And, it's during periods where there's real sort of unrest, you might say, in the market that, the VIX goes up. I mean, consider that in March of last year, we saw the VIX above 80.
Right.
So that gives you some point of reference for where we are now.
Yeah. I'm going to tweet out this chart because you really have to be looking at it for people who are not watching us on YouTube and just listening to see the difference between what we saw back in March and what you're talking about just in recent days. It's just massive.
Go for it, Tim.
Okay, thanks.
Well,
In fact, hey, it's already out on my Twitter feed at the.
Oh, I'm going to retweet yours.
Retweet it.
Well, and then take it back. If you go back to 2007 in the financial crisis, right? We were still above that level. What we saw in March, Dave, right? In comparison, we were close to it, but we were still higher in terms of the VIX than we were back in the financial crisis back in 08.
Absolutely, Carol. I mean,
it's wild.
Look at it this way. I mean, you only have to go back a couple of years to see a VIX in single digits.
Yeah, exactly.
Less than 10.
No,
here we are at 25, and we think it's low.
Yeah, I know. Listen, it's all relative. It's an indicator we talk about a lot, and I think there's some people who think it's one to closely watch, and some people who aren't so interested. But that perspective, Dave, is definitely interesting. Cool. Thanks, Dave Wilson. Really appreciate it. Dave Wilson with his chart of the day, and check him out at the One Day for that chart. And he's going to be back a little bit later on with his stock of the day. How much do you talk about VIX?
I don't talk about it a lot, but I think I think people are familiar, obviously, with it's a measure of anxiety, it's a measure of fear. I mean, it's the fear gauge.
Right.
But as far as the mechanics that go into it, I think there's a lot more to learn.
Yeah, and I think the intricacy, but especially when you see such a jump, it's certainly something significant. Hey, let's get back to world and national news. Back on over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. The White House Press Secretary Jen Psaki is denying that President Biden and his economic advisors are at odds over relief negotiations.
I've seen some of those reports. Many of them are ludicrous. I've sat in a lot of meetings with the President of the United States in the last few weeks, and even before then. There is no one who's going to tell him what to do or hold him back from his commitment to delivering relief to the American people.
Some Republican senators say they feel Biden is willing to negotiate with them to reach a bipartisan agreement, but that his aides are okay with pushing ahead without Republican support. Former President Donald Trump's longtime banker at Deutsche Bank is no longer with the firm. Bloomberg's Nathan Hager with more.
The bank says Rosemary Vlabic was permitted to resign in December after an internal investigation found she engaged in undisclosed activities related to a real estate deal. Back in August, Deutsche Bank began reviewing the real estate transaction between Vlabic, a colleague, and a company partly owned by Jared Kushner, former President Trump's son-in-law. Vlabic, who worked in the private banking division at Deutsche, helped manage Trump's relationship with the bank as it loaned hundreds of millions of dollars to his company over several years. Nathan Hager, Bloomberg Radio.
The Crown Crown scored the most TV Golden Globe nominations today, 6. The Netflix documentary is up against fellow Netflix shows Ozark and Ratchet, Disney Plus's The Mandalorian, and HBO's Lovecraft Country. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Tim and I wanted to bring you guys a story that we've seen on the Bloomberg today. And it has to do with Steve Cohen's .72 Asset Management. Of course, we know Steve Cohen, formerly of SAC, well-known hedge fund manager. And he's also come to light after the GameStop frenzied trading and everything that we've seen on some of the different platforms. He apparently has opened a new cash and raised more than, has opened to new cash, I should say, excuse me, and raised more than $1.5 billion in commitments in a matter of days, according to those in the know.
And there is that connection to GameStop. As you mentioned, the move comes after the hedge fund provided $750 million in emergency cash to Melvin Capital. That, of course, was struggling to keep up with GameStop and other shorts that had gone sour. Citadel's hedge funds put $2 billion into Melvin.
Yeah, which is interesting, right? The amount of money that has gone in.
Yeah.
And it's interesting. I always think, let's pull out the whiteboard and you get an idea of like who's involved in what, which is, I think, always telling and a little bit more transparent. What's interesting, too, though, that I'm finding .72 go after some new cash and raising it apparently because it sees investment opportunities in the market. One of the people who are in the know saying this, but asking not to be identified because the info isn't public. The firm had about $18.9 billion in assets as of October. So I think the whole idea, if you're wondering kind of maybe where the market goes and you're trying to get an idea, listen, we look to earnings and what CEOs have to say, but we also watch these hedge fund guys, especially some of the more well-known ones, when they're raising new money, especially when they think that there are opportunities. The next logical question is like, where does he see the opportunities? That's what we want to know.
Right, and it comes after not so great of a month. The hedge fund fell about 9% in January. Before its recent cash injection, .72 had about $1 billion invested in Melvin.
Yeah, exactly. So it's interesting to know. And listen, once we start to get some of those, hedge fund filings, we'll get a better idea maybe where, in the months to come in terms of where he's putting some of that money. So certainly one of the stories that we're following here on the Bloomberg. Coming up, though, folks, we're going to catch it down to the closing bell and check in with Alan Zafran over at IEQ Capital. You are listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ all higher. NASDAQ is at a record. Stocks are gaining for a third day. Investors assessing corporate earnings. After the bell, we'll be hearing from Qualcomm, eBay, and PayPal. Here's where we stand. The S&P 500 index up 9 right now, a gain of 0.25%. The Dow up 73, also up by 0.25%. NASDAQ at a record. It is up 20 points right now, 13,633. The old record on NASDAQ, 13,635. So right now, NASDAQ looking a little shy of that record, up now by just about 0.1%. 10-year down 10-30 seconds, 10-year yield 1.13%. Gold is down 0.3%, 18.33 the ounce. Silver moving higher now by 1.8%. Gold, as I mentioned, trading lower. West Texas Intermediate crude up 1.9%, 55.78 a barrel. Again, recapping, equities higher, NASDAQ close to a record, S&P up 8, up 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Great. It's just about, 11 minutes to go until we wrap up this trading day. And we've got the S&P off its best levels of the day. Dow pretty much just at its best levels of the day. And the NASDAQ off its highs and lows. Let's get into it with Alan Zafran, founding partner and co-CEO at IEQ Capital. They've got roughly $11.5 billion in assets under management. And Alan joining us on the phone from Foster City, California. Alan, good to have you here with Tim and myself. How are you?
Doing fantastic, Carol and Tim. Hopefully you dug yourself out of the snow and you're doing reasonably well.
Halfway. My car wouldn't move this morning, Alan. But you're in California, so you have little sympathy.
I don't get it. We pay the high taxes here like in New York, but we don't get the snow.
Yeah, I don't want to talk about it, okay? I'm a Californian.
Tim's car is frozen in a parking lot.
It's literally frozen in a parking lot. And my back hurts as a result.
So, gosh, what a week. Where do I start? Let's talk about Amazon, because we are all in on it today. Safe to say 24 hours ago or close to it, we were all shocked by the news that essentially Jeff Bezos resigning as the CEO of the company, not going away. But you look at some of these, big U.S. companies, some of these big U.S. growth stocks. How do you see that news?
I don't find it that surprising. Listen, obviously, Bezos has done an incredible job, unworldly, one of the greatest business transformations we will ever witness. But the timing ain't bad. Think of it this way. You took a company from nothing to, a massive amount of value, $2 trillion in value. Do you really want to be the person that tries to get up to $4 trillion in value? It's just not going to be as rewarding. And the other issue for Jeff, he's got a lot of other business interests. He actually has a charity that he's trying to give $10 billion away for climate change. He's running a space business that, frankly, Blue Origin, that's behind SpaceX. He's got an ego just like Elon Musk, and he probably wants to focus on some other aspects. And lastly, think of it this way. He's still got $200 billion of personal equity in the company. So when he's stepping away, he's not really completely stepping away. He's got a team of 26 people backing him. That's his S team, who's already been groomed to take over for him. So far from being at a shock, it's kind of time for him to step away, let the other people run the business, and he's going to have plenty of strategic influence and insight going forward anyway. So it's time.
One number that we've heard a lot today, Alan, has been $1.7 trillion. It's the market cap of Amazon right now. And I know, thanks to a note from our producers, that you think that future returns for both stocks and bonds even are right now likely constrained by today's elevated valuations. What do you think is overvalued?
I think the biggest thing that's overvalued is traditional bonds, not stocks. However, when you value stocks in the end, what you're doing is you're valuing the future cash flows, which are based on where rates are, discount rates.
GameStop excluded from this.
Yeah, I didn't use my surplus check to buy call options on GameStop like others. When you start to see interest rates rise, I believe that is the singular greatest fundamental threat to the stock market. I don't think you're going to see a rapid, dramatic, and horrible rise in rates, because I think the Federal Reserve is going to slowly jawbone and manipulate that rate to move up in a more orderly fashion. You'll get it coming up in fits and starts over years, not over months or quarters. But because rates eventually creep up, they compete with stocks for where capital goes. And basically, people pay lower multiples on their earnings on those stocks once rates go higher and higher. Or think of differently, your present value is worth less when you're using a higher discount rate on future cash flow. So that's a long-winded way of saying, when you do the math, if you thought you were going to make 10% in the next decade on stocks, maybe you're going to make 7%. It's not zero, and it's still a lot better than bonds, but it's probably lower than the 13% you made in the previous 10 years, which was higher than 10% a year. So this decade, maybe we give back a little of the over-return we made in the previous decade.
Okay. So you're saying So are you saying bonds are the better way to go?
No, far from it. So to be clear, I think traditional bonds are not a terribly attractive asset class, because you know what you're making the moment you buy it, which your treasury bond right now is 1%.
Right.
High quality corporate bonds is about 2%. I do think stocks are going to give you a much higher return than bonds, but instead of making 10% per year, because I think eventually the price earning multiples drop from what they are today, that reduces the return. If you work it out in the math, what might have been a 10% return looks more like a 7% return, because even though I'm paying 23 times earnings today, 10 years from now, someone's only going to pay 16 times those earnings. The earnings are going to grow a lot. The 16 times a lot of earnings will work out to my money growing at about 7% a year, but not 10% a year.
So it's like getting back to more realistic views, certainly when it comes to the equity returns. Is that fair? More
That's
historical
right.
returns.
I think that's right, but one other important caveat. It turns out PE ratios, valuations literally have zero predictive ability over the next 12 months about where the markets are going. So even if I tell you the market's marginally overvalued versus averages, they could just get more overvalued over the next year. And with all the stimulus that's been thrown in this economy and consumers being in great shape, I wouldn't be surprised if the stock market does better than 10% this year. I think all the conditions are in place for a very strong year this year. Eventually, rates will move up and multiples will compress a bit.
Well, Nasdaq's already
be linear.
Nasdaq's already at 5% year to date, so it's halfway there. I do wonder about, when you think of portfolio construction, you think there are opportunities away from traditional equities and fixed income, private real estate, private credit, and equity replacements. What are the alternatives that you're thinking about?
Well, in a world where I can only make 1% after tax buying high quality bonds, assuming I can find the right vehicles, either REITs, either in the public markets or even in the private markets, if properly structured, can give me a good rate of return. It turns out there are firms that make private loans to private businesses, and if they're thoughtfully done, where you're the senior lender and have the lien on all the collateral and assets, you could arguably make closer to 8 to 10%. It's taxable. That's still after tax 4 or 5%. That's a lot more interesting. There are other obscure areas of the market, things that are called secondary investments, when you're actually buying someone else's illiquid investment. They need cash, and they are willing to sell to you at a discount from the current value of that investment in order to get out. All those things might make sense.
All right, we're going to leave it there. Alan Zafran, thank you so much. Founding partner and co-CEO at IEQ Capital, $11.5 billion in assets under management, on the phone from Foster City, California. You're smiling.
Yeah, California must be nice right now.
I'm
homesick.
I can't wait for you to be able to dig out your car. Let's hope it gets a little warmer.
I'm going to have to do it tonight so I don't get stuck in that situation like I did this morning. Thank you very much.
Good luck with that. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Late day fade. An update nonetheless, so stocks advance for a third straight day with investors assessing corporate earnings. We are awaiting the latest numbers out of Qualcomm, eBay, and PayPal. S&P did advance at a slower pace relative to the surge of the past couple of sessions. Energy and financial shares outpacing technology even after Google's parent Alphabet hit a record on stellar results. Today, we did see Google shares, Alphabet shares rallying by 7.4%. Amazon, after last night's report, dropped today by 2%. S&P at the close up 3, little changed, up 0.1% to 3830. The Dow up 35, higher by 0.1%. In fact, a retreat for the NASDAQ Composite Index. We could have been looking at a record close there again. Late day fade. NASDAQ actually fell 2 points to 13,610, a drop of less than 0.1%. Bottom line, little changed. 10-year down 9/30 seconds. 10-year yield 1.12%. Gold down $4 the ounce at $18.33, down 0.2%. Silver advancing 2% today, and West Texas Intermediate crude up 1.8%, $55.79 for a barrel of WTI. Alan Zafran is co-CEO at IEQ Capital. Moments ago, right here on Bloomberg Business Week, he talked about projected returns for stocks compared to bonds.
When you do the math, if you thought you were going to make 10% in the next decade on stocks, maybe you're going to make 7%. It's not zero, and it's still a lot better than bonds, but it's probably lower than the 13% you made in the previous 10 years.
GameStop has appointed Matt Francis to the newly created role of Chief Technology Officer, effective February 15th. Francis was most recently an engineering leader at Amazon Web Services. Today, we saw shares of GameStop advancing by 2.6%. AMC Entertainment surged another 14.7%. Recapping mixed day, NASDAQ lower, S&P up 3, up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Whoa, yeah, what I say.
Nobody move a muscle.
Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got some moves.
On Bloomberg Radio.
All right, you're listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio. And just a little bit more of an overview. Charlie giving us those closing numbers on Wall Street. S&P 500, kind of an even split today. 257 names in the S&P 500. Higher today, 247 lower, 1 unchanged. And if I look at those 11 major industry groups, 1, 2, 3, 4, 5, 6 were higher today. Top of the pack, energy up 4.25%. Communication services names up about 2.25%. And then financials up 0.6%. Bottom of the pack, healthcare down 0.6%. And then just below that, consumer discretionary down about 0.75%. Amazon, you heard Charlie talk about that throughout the day today. That stock about 24 hours ago, their earnings coming out. And then, of course, we got the news that Jeff Bezos was stepping down as CEO. The stock closing down 2%, down 67.47 a share, closing at $3,312.53 a share. Do want to bring in our Anurag Rana, who's Senior Software and IT Services Analyst at Bloomberg Intelligence, and he's been talking about the changes in Amazon specifically and the appointment of Andy Jassy as the next CEO. When we look at the cloud industry, what it means for Amazon and what it means for some of the other big players. Anurag joins us on the phone from Chicago. Anurag, this isn't an angle we've talked about too much, so I'm really glad that you're here. Tell us how you see it.
So, Carol, the way you want to look at it is, Amazon's obviously the biggest e-commerce company in the world. It's also the biggest cloud infrastructure company in the world. And, Andy Jassy becoming the CEO, in our view, could also push them to be more aggressive in that cloud-related products. Now, if you remember, back when Microsoft was under Obama, we got Satya Nadella came over and became the CEO, and cloud became a very big portion of their overall business. That's because he was actually heading ahead of that division, and he pushed a lot of the resources into that area. Now, we're not saying that Amazon's lagging in cloud infrastructure. In fact, they are the clear leader. But over the last few years, we have seen Microsoft narrow that gap, and I think you could see a little bit more, focus on that area so that they continue to be the leader.
Well, so, and remind us again, you said in terms of market share, when it comes to web and cloud-based services, where is Amazon versus some of the other players? Is Microsoft number 2?
Yes, Microsoft is number 2, but the most important part is that Amazon only sells cloud infrastructure services. So Amazon is not very big in applications, unlike Microsoft that has a good portfolio of both infrastructure and applications because of their Office 365 suite. But the biggest story for us going forward is that while the history or the growth so far in cloud infrastructure has been driven by startups and the companies like Uber and Netflix, the next phase of the cloud growth is going to be driven by the incumbents, the older companies such as the likes of JP Morgan and Pepsi and Coke. And for those companies, Amazon doesn't have a presence there, but Microsoft does. Microsoft's been working with these companies for several years. So there is a risk for Amazon to close the gap even more unless they accelerate their enterprise focus.
That is really fascinating. So does that, so having said that, what do you need to see then potentially from Amazon with Jassy now in the spot as CEO or in the months to come? What do you need to see for him, to make sure that he's kind of thinking about these kind of older types of companies moving more aggressively into the cloud, who already have relationships with Microsoft?
Yeah, fair. So it has been Amazon's strategy. It has been Amazon Web Services strategy to go after those customers. But once again, what we think could happen is they could double down on either the sales force or their marketing spend, because one of the ways you actually get these customers is you go and knock on their doors, and you need a big sales force for that. And we have seen Google's been doing that quite a bit over the last 2 years with a new CEO over there on the cloud side. And I think we expect the same from Amazon, which means maybe in the short term, the margins could be under pressure. But, it's very important to get the mind share of these older companies as they look to move to the cloud.
Really important angle. I'm so glad we got to you. Anurag, thank you so much. Be well. Anurag Rana, Senior Software and IT Services Analyst at Bloomberg Intelligence, on the phone from Chicago. Do want to mention some earnings that have just crossed the Bloomberg eBay out. Fourth quarter adjusted EPS continuing operations, 86 cents a share, 4 pennies better than what Wall Street was forecasting. They are also out with an outlook for the first quarter adjusted EPS continuing operations at $1.03 to $1.08 versus an estimate of 85 cents a share that is out there. They're expanding their share buyback authorization by an additional $4 billion, and their fourth quarter revenue, net revenue, $2.87 billion. That was a beat. It's above the estimate of $2.7 billion. Quick check on what eBay is doing in the after hours. Stock is up 8%. Qualcomm also out, saying that they see second quarter revenue 7.2 to 8 billion versus an estimate of 7.1 billion. And in the after hours, we're seeing shares of Qualcomm. They're actually down nearly 8%. And Grubhub out with a fourth quarter adjusted loss of 41 cents a share versus an estimate of 8 cents a share. So again, the earnings continuing to cross. Let's get to Dave Wilson and his stock of the day. Dave, what do you got for us?
Meritor, Carol. It's a supplier of parts for commercial, government, and military vehicles. Now, the company, like Amazon, is in the midst of a top management change. CEO Jeffrey Craig will step down at month's end and become chairman. His successor is the chief operating officer, Chris Villaraya. Meritor was founded in 1909, was spun off from Rockwell International in 1997. The ticker is MTOR. The company shares reached a record back in 2002 and have been up and down ever since. Now, Meritor has been on the upswing since last March. The rally accelerated today after fiscal first quarter results came out. Earnings were well above analysts' average estimate in the Bloomberg survey, and revenue top projections for the fourth straight quarter. Meritor also received a 3-year contract to supply powertrains for, wait for it, electric tractor trailers. The company signed the deal with Canada's Lion Electric, which happens to be going public through a blank check company, but I digress. In response, Meritor shares finally surpassed their more than 18-year-old record. They climbed as much as 22.5% and closed with a gain of more than 12%.
All right, Dave, thank you so much. I know you did a squeeze there. Really appreciate it. We got a lot of earnings and a lot of stocks moving here in the after hours. Big moves, in fact. All right, let's get to world and national news. Back over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, as it begins its second month in session, the U.S. Senate and all its committees are now formally run by the Democratic majority, recognizing the 50-50 split with the Republicans.
Majority Leader Chuck Schumer announced that he and Mitch McConnell have made the same kind of agreement their predecessors last made 20 years ago.
Committees can promptly set up and get to work with Democrats holding the gavels. Senate Democrats are not going to waste any time taking on the biggest challenges facing our country and our planet. I've already instructed the incoming Democratic chairs to begin holding hearings on the climate crisis.
McConnell delayed the deal by insisting on a pledge not to kill the filibuster, finally noting the two Democratic senators agreed with him. Climate bills could well hang by a similar thread. In Washington, Irv Chapman, Bloomberg Radio.
The House Rules Committee is setting parameters for tomorrow's debate over removing committee assignments from Congresswoman Marjorie Taylor Greene, who supports wild conspiracy theories. Committee Chairman Jim McGovern says Greene has embraced what he calls truly sick stuff.
When a member talks about school shootings being false flag operations, they should lose the privilege of serving on the Education and Labor Committee.
House Minority Leader Kevin McCarthy met with Congresswoman Greene last night, but no decisions were made on whether she would retain her spots on the Education and Budget panels. Congressional leaders have paid tribute to slain U.S. Capitol Police Officer Brian Sicknick in the building he died defending. He died in the January 6th attack on the U.S. Capitol. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser along with Charlie Pellet of Bloomberg News. And Charlie, I've got three screens up watching these stocks move big time in the after hours. Let's start with Qualcomm. It's been down as much as 15% in the after hours. Right now, showing about a decline of about 8%, despite giving an upbeat sales forecast, despite Qualcomm coming out with an upbeat sales forecast. They did talk about second quarter revenue, $7.2 to $8 billion versus a forecast of $7.1 billion, but investors not too impressed.
Indeed. Let me just back up a little bit, too, and explain why does one care about Qualcomm. Qualcomm is the biggest maker of chips that connect smartphones to wireless networks, also supplies processors that give the devices their computer-like capabilities. If you're holding the power of computing in the palm of your hand, I think I'm ripping off a commercial there, you have Qualcomm to credit. Customers include Apple, Samsung Electronics. Companies' projections are also very closely watched about the overall health of the mobile phone market. So that's why we care a great deal about the numbers that Qualcomm puts out.
And it's interesting, in the first quarter, the company came out with revenue of $8.24 billion. It's a gain of 62% from a year earlier. So it's interesting that maybe there's just some disappointment in the numbers. Keep in mind that this stock was on quite a tear last year. It was up about 73%. Moving on over to eBay, though. eBay, Charlie, up about almost 8% in the after hours.
Indeed. I'm not going to be the one to... Yes, I am. eBay investors bidding up eBay shares now higher by just about 8% after hours. eBay, too, somewhat closely watched just in terms of what consumers are doing. And obviously, when we're all working from home or doing school from home, or indeed spending a lot more time at home instead of commuting, people have a lot more time to spend on websites like eBay, buying and selling.
Right. One of the big winners during the pandemic, no doubt about it, really an outperformer. And the stock, eBay, the company giving up an upbeat forecast for the first quarter. Another name we're watching is Grubhub, down about 3.25% in the after hours. Some disappointment there. Charlie, thank you so much. Appreciate it.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, keeping an eye on Qualcomm shares after hours. They are down now by 7.9%. Qualcomm did deliver an upbeat revenue forecast for the current period, adding more evidence that consumers are spending heavily on new 5G smartphones. However, shares are tumbling after hours. Also out after the closing bell, Grubhub reported fourth quarter adjusted loss per share that missed estimates. Grubhub shares, they are tumbling now by just about 4%. An eBay forecast adjusted EPS from continuing operations for the first quarter. That guidance beating the average analyst estimate. eBay shares are surging now by just about 9%. It was an up day on Wall Street. However, stocks finished well off session highs. In fact, NASDAQ had a loss. Stocks almost wiped out their advance as a drop in technology and retail shares dragged down the NASDAQ 100 index. Here's where we ended the session. NASDAQ 100 down 0.4%. NASDAQ Composite lower, little change, down 2 points. Again, late session fade there. S&P up 3, a gain of 0.1%. The Dow up 36, up by 0.1%. 10-year down 11/32. 10-year yield 1.13%. Gold down $4 the ounce, down 0.2%. 18.33 the ounce. And West Texas Intermediate crude did advance today. WTI up by about 1.9%. The Trump building at 40 Wall Street in New York saw its revenue fall last year as tenants looked to get out of leases due to pandemic issues and those pandemic-related office closures. This, according to loan documents. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar in our Interactive Brokers studio. And listen, everybody, you want content? Well, I am here to deliver some because there's a new series debuting on Bloomberg Quick Take. It's called Portrait, and behind it is my former co-host and now Quick Take chief correspondent, Jason Kelly. He joins us on the phone from Sleepy Hollow, New York. So nice to have you here.
Same here. I almost thanked Charlie.
You can. You know how to do it. How are you?
I'm doing okay. It's very snowy. I'm sorry I'm not there with you in the office, but I looked outside and I was like, I've got all this fancy technology. I can still talk to Kara.
Yes, you can. So speaking of fancy technology, you've got a fancy new show coming up. Tell us about this series. What is Portrait about?
It is so much fun, and it's people that we got to know together. And the first episode is about Rich Paul, the super agent. This is a show, Carol, that's really all about kind of understanding where someone comes from, what they've accomplished, what they have seen along the way, and maybe some lessons we can take. And so I caught up with Rich virtually, of course, remotely. He was out in Beverly Hills. But this is a guy who you may or may not know. He started out selling jerseys out of his trunk in Cleveland.
Check it out, everybody.
I do think there's an open-mindedness more today than it was of yesterday. Yesterday's owners versus today's owners, yes, they're definitely different. From an executive perspective, we still have a long way to go, but they're trying, they're trying. And that's all you can ask for. All you can ask for is effort. Acknowledgement, effort, understanding, and a willingness. It's a different time. It really is. And I do think that going forward, the world will be different. And there will be an ability to be okay with the skin tone of somebody being different than yours. And the sun would definitely shine brighter if we can ever get to that point.
Jason Kelly, that's incredible.
Yeah, thank you. Yeah. It's a really interesting conversation. I hope people will tune in. I mean, this is a guy who now is in the corridors of power. Yeah. He represents LeBron James, as you know, Anthony Davis, Anthony Edwards, Chase Young of the Washington football team. He is doing it and making it happen, but it has not been easy. I mean, the NCAA has made it hard on him. Yeah. It has been a tough road.
Well, and it's really, I kind of wrote down some notes. I watched the episode earlier today, and it's really kind of a great rags, or I was saying a vintage sport jersey to Rich's story. I mean, it's pretty phenomenal. And you and I have talked about how he, initially met LeBron, and it's like, if that hadn't happened, you wonder, this guy would be doing something really cool because that's just kind of who he is. But that chance meeting with LeBron, LeBron years ago and the trajectory that set him on.
It's amazing. Yeah, I mean, and in fact, during the episode, you'll actually see the jersey that he was wearing, that literally they're standing at the gate in Akron getting ready to get on a plane to Atlanta. LeBron James, he's then a junior in high school, but he's already been on the cover of Sports Illustrated. Basically looks at this guy's like, hey, nice jersey. And the rest is history.
Like,
I mean, literally, the rest is history when it comes to Rich Paul. It's one of the fastest growing sports agencies in the world. $1.7 billion in contracts negotiated last year alone.
Well, listen, and we've talked a lot about, these sports figures, these individuals, whether it's a LeBron or somebody else, how they have become, and you think about sports franchises overall, what they did during the elections in terms of opening up stadiums and arenas so that people could vote. But these sports individuals, they stand for so much. And really, when it comes to being, agents of change, Jason, they're doing a lot out there.
Absolutely. And they're pushing hard. And, you heard in that clip that you just played, Rich Paul talking about the owners, they're getting there, but the executive ranks, and you and I have talked about this a lot. We've talked to some of the people who are running these teams. Increasingly, you're seeing a few more people of color, like Jason Wright over the Washington football team.
Right.
But otherwise, the representation just isn't there. But let me tell you, Rich Paul is pushing hard.
Right. And has a seat at the table. This is something you and I have talked about so much, that there's so many people who don't. And how do you get, populations, groups of people, their voices heard? They've got to have a seat at the table. He definitely does.
He absolutely does. So stay tuned. Next week, another friend of yours is going to be on Portrait, Mindy Grossman. Just a little tease ahead.
Well, and I have to say, the way you do it, the deep dive into a conversation, and then I don't want to give too much away, but bringing in some surprises, it really makes it fun to watch. And
well, thank you.
Good stuff, kiddo.
Thank you.
Good luck with that. And we can find it at Bloomberg Quick Take, Bloomberg.com/Quick Take, and on many major streaming platforms, including Apple TV, Android TV, and Samsung Smart TV. Did you have a favorite moment of it, though, just quickly?
The favorite moment, you mentioned some of the surprises, and I won't spoil all of it, but the guy who created Interscope Records and Apple Music and Beats Electronics, a guy named Jimmy Iovine, let's just say he weighs in at one point during the episode.
He does, and you could see the impact that has on Rich. It's really fun to watch.
It is. So I had a great time doing it, and as you said, a lot of fun we're having. Miss you, though.
I miss you too.
You're doing a great job.
Thank you. Likewise, kiddo. And looking forward to that series. That series written and hosted by the one and only Quick Take Chief Correspondent Jason Kelly, my former co-host, beginning its 5 episodes first series, starts tonight on Quick Take. And as I said, find Bloomberg Quick Take at Bloomberg.com/Quick Take and on many major streaming platforms, including Apple TV, Android TV, and Samsung Smart TV. You're looking for content? I'm giving it to you, and so is Jason. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio. Coming up, we're going to talk a little bit about the auto sector and industry and what's to come here in this year of 2021. We're going to check in. Great to have back with us President and CEO of Subaru of America, Tom Dahl. So we'll get to him in just a moment. First up, though, back to your top business stories and some of the news. Lots of earnings after the close, Charlie.
Lots of earnings, but that's what we do here at Bloomberg. I've got you covered. Qualcomm reporting first quarter revenue that did come in shy of estimates. Shares down now by 9% after hour. eBay's forecasting adjusted EPS from continuing operations for the first quarter. That guidance beating the average analyst estimate. Look at eBay raising the dividend. Shares surging after hours, up now by roughly 11%. PayPal says consumers flocked to its service in the final months of the year as they hurried to finish their holiday shopping and started using the company's wallets to buy and sell cryptocurrency. PayPal up now by about 1%. It turned out to be a mixed day when indeed we had NASDAQ trading at a record but ended the session lower today. Stocks almost wiping out their advance as a decline in technology and retail companies dragged down the NASDAQ 100 index. That index down 0.4% today. NASDAQ Composite Index lower, little change, down 2 points, down less than 0.1%. S&P eking out a 3-point gain, up by about 0.1%. The Dow also up 0.1%, higher by 36 points. The 10-year yield 1.13%. Gold down 0.2%. Silver, in contrast, up today by 2.1%. West Texas Intermediate crude up 2%, 55.83 for a barrel of West Texas Intermediate crude. Sources tell Bloomberg SEC investigators are combing social media and message board posts for signs that fraud played a role in dizzying stock swings for GameStop, AMC Entertainment Holdings, and other companies. Richard Bernstein is Chief Investment Officer at Richard Bernstein Advisors, and on Bloomberg Television and Radio this morning, he was asked about for some of those names.
I think this is nutty, but more important, I think it's very sad. Because I think what's going to happen is that you have a lot of people trading stocks, not understanding what the financial markets are about. They think it's easy. And when fundamentals and price action separate so dramatically, history says people lose an awful lot of money.
Bank of America is pledging to add $10 billion to an affordable home ownership program through 2025, tripling its initial commitment. Bank of America up today by 1.8%. Recapping stocks mixed. S&P up 3, a gain of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. A lot of news flow on this Wednesday. Big auto news earlier today. We had a couple of different stories. One had to do with Daimler splitting up into the world's largest makers of luxury cars and commercial vehicles, so they're doing a split. Meanwhile, we've been watching other auto stores, including the more aggressive moves into EVs. Then we also heard from GM today saying the chip shortage was hurting it. So there's a lot going on. Let's find out what he is seeing. It's great to have back with us Tom Dahl. He is president and CEO over at Subaru of America. He's joining us on the phone from Subaru headquarters in Camden, New Jersey. Hey, Tom, nice to have you back. How are you? How are you doing?
Great, Carol. How about you? Great to talk to you again.
Yeah, great to have you here. Hard to believe that we're a year in on all of this, but here we are. How did the pandemic impact you guys, and where are you now in terms of visibility for 2021 and trends for 2021?
Sure. Last I spoke to you, I think it was probably last March or early part of April.
Yeah.
And we were really struggling at that time. Our business was kind of in shatters like everybody else's was. And in fact, our factory had closed down probably from the end of March through about the middle of May. And then as we reopened, as the economy started to reopen, as we got into the late spring and early part of the summer, there was a tremendous rebound. And in fact, if you look at our sales from, I would say, that July period through December, we were actually selling at about a 700,000 sales pace, which for us is pretty good. And that continued over into January. January, we had a record month. We sold 46,400 vehicles, best January we ever had in the history of the company. And we're looking forward to that momentum continuing as we go through the first half of the year, and really as we project into the second half of the year, because with all the stimulus that's currently out there, and plus the stimulus that's currently being proposed, or at least talked about at this point anyway, we think the market in the second half of the year could really pop, and we need to be prepared for that.
That's really interesting. So the stimulus money, is that how you account for a lot of the increase in demand?
I think a lot of the increase in demand had to do with the fact that, people are really interested in SUVs and trucks. The truck market and SUV market, including the small SUVs, where we compete heavily with our products like Crosstrek and Forester, those segments are doing extremely well.
Yeah.
And of course, the sedan market has taken it on the chin, as you know, over the past year.
Right.
Because of the demographics of that segment. The demographics are such that that's probably the buyer that would be more impacted by what was happening in the economy. But buyers of trucks and SUVs were less affected, and therefore we're able to kind of sustain the market.
Hey, I want to ask you, Tom, are you finding that you're getting any kind of new or first-time buyers? Because one of the things that we talked about a lot during the pandemic is people were like, okay, I can't travel anywhere. I'm limited to where I can go, but I can get in a car and I can drive. And that kind of became such a way of feeling a little bit of a freedom or normalcy. And I just do wonder, in terms of the buyers, were they repeat Subaru buyers? Were they first-time Subaru buyers? And were they first-time car buyers?
Really good question. I would say it's a combination of both, right? I mean, our owner loyalty is quite high. We're number one in the industry in terms of our owner loyalty. So we know based on the total number of vehicles that we've sold over the last 10 or 12 years that a certain number of those people have to come back to the market anyway. They just need to have another new car. In addition to that, we were conquesting. We're probably one of the few brands that is still able to conquest to a fairly strong extent.
What does that mean, conquest?
Well, that means they're leaving other brands to come to us.
Got it. Okay.
So we're able, because of our great products. You can't do it without strong products, as you know.
Yeah.
And as a result, with our awards and accolades that we get from Automotive Lease Guide or Kelley Blue Book, we've won Kelley Blue Book's most trusted brand, I believe, for 6 years in a row. I think out of the last 9 years, we've won ALG, Automotive Lease Guides Award for best residual values in the industry for 7 years in a row. Lowest cost owned, crash test by the Insurance Institute for Highway Safety. We kind of nail and check all the boxes. So as a result, people that are in the market for SUVs, and particularly smaller mid-size SUVs where we're strong, have a tendency to want to take a look at a Subaru, or at least they should, before they make their final decision, and we're lucky to get some of those customers to come to us.
Well, and full transparency, my co-host Tim, who has gone for the day, but he'll be back, of course, tomorrow, but I believe he drives a Subaru, and my first car, Tom, was a Subaru, and it was such a great car. Sit tight for a second, Tom, because I want to talk to you a little bit more about what's to come in the year, and I've got to ask you about, I know you've been answering some of the questions throughout the day about chip shortages, because it's certainly something that's on our radar, so I want to pick your brain about that. We're going to get back to Tom Dahl. He's President and Chief Executive Officer at Subaru of America, joining us from their headquarters in Camden, New Jersey. Right now, though, back to World and National News, back on over to Nancy Lyons. She's in our 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. Democrats have reached an agreement with Republicans to organize the evenly split chamber. The deal with Senate Republican leader Mitch McConnell ends a standoff that prevented the new Democratic majority from setting up some operations. Officer Brian Sicknick received a special farewell today in the Capitol Rotunda. Senate Majority Leader Chuck Schumer paid tribute to the Capitol police officer who was killed in the riot on the Capitol.
That Brian and his family were made to pay such a high price for his devoted service in the Capitol was a senseless tragedy, one that we are still grappling with.
Sicknick is being buried at Arlington National Cemetery. Pete Buttigieg has been sworn in as Secretary of the Transportation Department. Vice President Kamala Harris administered the oath.
I, Peter Buttigieg.
I, Peter Buttigieg.
Do solemnly swear.
Do solemnly swear.
That I will support and defend.
That I will support
Buttigieg is expected to play an important role in promoting President Biden's sweeping green initiatives, helping to oversee stronger automotive fuel economy standards to reduce greenhouse gas emissions. And also, he'll support the president's push later this year on a $2 trillion climate and infrastructure plan. The Justice Department is dropping its discrimination lawsuit against Yale University that had alleged that the university was illegally discriminating against Asian American and white applicants. The department says in its filing it was voluntarily dismissing the action. This all, though, needs to have some approval from a judge. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. We're going to get back to Tom Dahl over at Subaru of America in just a moment. In the meantime, Charlie Pellet joining me on a couple of stories, planes, trains, and automobiles kind of thing. There's a story that, man, it's right up your alley. Cruise fanatics, it's by our friend Golden. She writes for Business Week. Cruise fanatics are eagerly volunteering to test virus protocols. And part of being able to get back to the high seas, the big cruise line operators, Charlie, I think they have to prove to the CDC and other regulators that they can do it safely.
Yeah, if you were ever looking for anything that does not involve social distancing, it would be a cruise. Very often you're online for
You know firsthand.
I know firsthand. I love cruising. I think it's the greatest vacation that there is out there, and I've taken a lot of cruises. But I tell you, compared to some of the people who I looked at in this article here, you had one person who had 20 cruises booked for this year.
That's crazy.
And I'm just, trying to crunch the numbers there. I went online. I saw some cruises. You can get on a cruise for roughly $250 if you're only going to go for a couple of nights. $500 a person right now if you're willing to go 7 nights. That was for a cruise on Royal Caribbean in October. But the bottom line is Royal Caribbean wants to make sure that it can handle a large number of passengers, that they can be entertained, that they can dine, that they can have stuff to do on board the ship. They can get on, they can get off safely, and not have to worry about all the pandemic issues.
So the point we're doing this story is that Royal Caribbean has called for volunteers in November. When they did so, they got 100,000 signatures in the first week. An additional 150,000 have jumped on board since then. They're all eager to be part of a so-called test cruise, which are one in a series of requirements from the CDC and before lines can resume commercial operations. So they're basically willing to be, to some extent, guinea pigs to show that these cruise, line operators can do it and do it safely. Charlie, would you be a guinea pig here?
I would not, and I'll tell you why. It's the line that I've heard some of our guests say before. We all knew when it was safe to leave the office, or when it was appropriate to leave the office. Nobody knows when it's safe and appropriate to go back to the office.
Right.
And I will know it's safe to get back on a cruise ship when movie theaters open regularly, when I can eat, in a restaurant at theoretically 100% capacity and fly without any hassles. That's when I'm back on a cruise.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Qualcomm shares slumping after the chipmaker's sales forecast disappointed some analysts who become increasingly bullish following Apple's recent results. Qualcomm reporting first quarter revenue that came up shy of estimates, shares down now by just about 9%. eBay heading in the other direction, up 9%. It forecast adjusted EPS from continuing operations for the first quarter. That beat the average analyst estimate. PayPal Holdings said consumers flocked to its service in the final months of last year. Shares of PayPal after hours up now by about 3%. Late day fade. Stocks almost wiped out their advance as a decline in technology and retail companies dragged down the NASDAQ 100 index. Today we saw the NASDAQ 100 index down 0.4%. NASDAQ spent much of the day higher, indeed at records for much of the session, ended with a loss of 2 points, little change, down less than 0.1%. S&P up 3, up 0.1%. The Dow up 36, also up 0.1%. 10-year yield 1.13%. Gold down 0.2%. In contrast, silver up today by 2.1%, and crude West Texas Intermediate up 2%, 55.87 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. Let's get back to Tom Dahl. He is president and CEO over at Subaru of America, still with us on the phone from Subaru headquarters in Camden, New Jersey. So, Tom, let me ask you, I'm sure you've been asked about it many times, and I did watch earlier when you were joining our Bloomberg TV colleagues, this GM story today saying that they have some chip shortages and that it was hurting it. You guys, you've been doing okay.
So far we have been, yes. It is going to affect us at some point along the way, but we know that through the first quarter of the year, March, it's not going to impact us all that much. Now, we're still waiting to get information from our suppliers about how it might affect us as we get out into April and May in particular. But we're hopeful that the impact isn't going to be that much.
What's going on?
That's a good question. You would think that there'd be enough supply given the fact that these electronic devices and 5G devices that people are saying is the cause of the shortage. People were purchasing these things well before the pandemic started. And then coming out of it, production was actually, for us, was very strong, and we could get really all the chips we wanted through the period up until probably early part of December. And that's when we first started to hear about this potential for a chip shortage. So I know they're working with our suppliers all over the world to try to figure out where we can source additional chips. And I'll be honest with you, I mean, it seems to us anyway, the situation seems to be getting better as opposed to worse. But I can't speak for all of the other manufacturers. I can only kind of speak from us.
Right, right. I do have one question, though. I'm curious, are you concerned, or could it lead to higher prices down the road, potentially, especially if there are shortages?
I mean, it could be depending upon what the chip manufacturers do with their pricing. We all have pricing contracts with the chip suppliers, but in a situation like we're in, and if you've got to somehow find another source for your chip supply, there could be increases in chip prices. But we're not, at this point, forecasting any significant increase in prices as a result of the chip shortage.
Well, and it's interesting, too. You know, we've been talking a lot about kind of the chip industry, I feel like, Tom, over the last year. I mean, I look at my car. It's so much a piece of technology, and the amount of, technology that's in it, running it. And as you move towards, EVs, it becomes, I feel like, even more so. Do we need to, as a world, as a country, kind of look at our chip supply chains more closely, and maybe even as governments being much more active in terms of those businesses and making sure that everybody and anybody who needs them has access to them?
They are clearly a vital aspect of our vehicle production. There's no question about it, because they're in so many different components. They're in our head units, they're in our engine control modules, they're in a lot of the advanced safety equipment that we provide. So I do believe that it is something that governments need to look into to make sure that there's a secure supply of these chips, so that manufacturers such as ourselves don't get caught in a situation where you can't supply an adequate number of these chips that would meet supply and meet demand. Because if manufacturers aren't able to get these chips, it literally does stop the production, because you can't produce these vehicles and then insert the chip later. The chip has to be inserted into the device before it gets put into the vehicle. So it really is something that can really throw a wrench into the whole production system. So it is something I think it needs to be examined and looked into.
Yeah, it just feels like that there's been a fair amount of momentum building, especially over the last 12 months. And maybe it has to do with supply chains and trade deals and so on, that we've all just been looking at this more closely. Tell me what's coming down the pike from you guys. I feel like that there's been kind of ramped up more tension when it comes to EVs and more players getting more aggressive with some of their targets. How do you see it playing out?
We're just like everybody else, with the way greenhouse gas fuel economy standards and emissions requirements are. We're going to have to come to the market with a full slate of EVs and hybrid vehicles. In fact, our president at Subaru Corporation in Japan has said that by 2030, he's expecting that 40% of our sales volume will come from either EVs or some type of hybrid type vehicles. So the industry is moving in that direction, and it obviously could move faster depending upon what governments do in terms of mandating. But right now the issue is more one of cost, right? Mm-hmm. How do you produce these vehicles at a cost-effective manner such that we can keep momentum that we've got going on in the market and keep people employed and making sure that people can really afford these cars.
Right. It's interesting. I don't feel like we've hit a tipping point, but I feel like, forgive me, Tesla has definitely changed the trajectory here.
No, it's going to. I mean, it's and you can see what's happening in a lot of countries around the world, including our own, where government is now becoming more actively involved with more of these electric vehicles and hybrid vehicles being produced in the market, because everybody's concerned about global warming, ourselves included.
Right.
And we have to make sure we're good stewards of the environment. But it's happening at a very quick pace, and once that tipping point comes, I do believe it'll happen fairly quick. I just think we have to overcome some of the range anxieties that customers have, and make sure that the vehicles can meet their needs.
Right.
And once that happens, I think it's gone. I think it takes off.
And the infrastructure's there. Hey, listen, you just mentioned being good stewards. You guys have definitely been good stewards when it comes to those folks who are really struggling when it comes to making sure that they've got food to eat and put food on their tables during this pandemic. Just remind us what you guys are up to.
Well, we were struck by the number of people that unfortunately had to visit food banks last year during the peak of the pandemic and now. And if you look at what's happening in food banks, right now is when they really need to have the food. And what we've done is we've partnered with Feeding America. We're donating another 100 million meals to Feeding America on top of the 50 million meals we donated last April. So between us and our retailers, it's going to be over 150 million meals that we've donated to Feeding America to help with the hunger crisis. And as you probably know, Carol, 1 in 4 children in the country is affected by some form of food insecurity around the country. So this is our way of saying, enough's enough, and we got to do what we can do to help alleviate this crisis situation that we're in.
I think it's really important, and I feel like as a society are leaning more and more on the private sector to do this. Tom, always good to check in with you. Thank you so much, and take care. Tom Dahl, President and CEO over at Subaru of America from Subaru headquarters in Camden, New Jersey. Coming up next is Sound On. Kevin Cirilli is out. Jeannie Shanzano is in, Bloomberg contributor. What do you got on tap, Jeannie?
Hi, Carol.
Hi.
We're going to be, it's good to talk to you. We're going to be talking to Congressman David Schweikert from Arizona, and he's got the hottest ticket in town. He's in the Republican conference, I'm sure, debating the future of Liz Cheney and Marjorie Taylor Greene.
Yeah, I saw some interesting headlines coming across on that, so looking forward to that discussion. Jeannie, thanks so much. Have a great broadcast. Sound On with Jeannie Shanzano. She is Bloomberg contributor. We've reached out to her so much in this past election year, and she's also a political science professor over at Iona College up there in Westchester. All right, for the Bloomberg Business Week team and Tim Stanovic, have a good and safe evening. Stay warm, everyone, especially if you're there on the East Coast. I'm Carol Masser, and this is Bloomberg.